This is the Aussie dollar yen on the 60, and we have a potential low and tight flag looking like this. So thumb move. We've now got two touches either side. What I'm just going to do is the higher time frame analysis. So here on the dailies, if I put a structure level on here, we can see that we've violated. Just here we've broken below, should I say, that entire level. We did have a gap here, so we just put that in as a big red candle there. And what price then did is we pulled back. Where did we pull back to? Into the wicks of the previous outside return, and from there we have been starting to see the market come lower. As we go down to the 60, the next structure level that I was interested in is this one right here, which are the wicks. And as you can see, we have now broken below them. So this is not, sorry about that, this is not a double bottom. So the rules for me for a low and tight flag is we must be in trend, or we must have just violated major structure. And we clearly here we've violated to the downside on the higher time frame. We've come up to the outside return here, and we've just violated structure here as well, and we do have room to come lower down to the structure level. So this does tick all the boxes. We're looking for a sore thumb move. Here it is. We're looking for a directional move. There it is. Look at all the selling pressure in this directional move. We're then drawing on the trend lines on the closes of the candles. We're going to duplicate that, move it up. We need a minimum of 4 touches, 1, 2, 3 and 4. What I really like about this low and tight flag is the wicks come into the wicks, and we've held that structure level. So not only have we violated to the downside, we've pulled back up into the outside return and tested the closes of the candles. For me then, I need a red candle. Now this is a good sign right here. This is a indecision candle, doji, and I am now looking for a red candle. If we do get it, that will be my entry. We'll be looking at something like this. My stops will go an ATR above, so it's going to be 12 pips, so it's going to make it 47. It's going to be there. It's going to be an ATR above the highest point so far, which is this one. It looks as though it might actually be this one in the end. And then looking for that 127 extension for targets. Breakout patterns nearly always play for that 127. It does get hit more times than an AB equals CD pattern or playing for structure. So for me, that's what I'm playing for. And in terms of targets, then you can see we've got a very nice reward to risk here. We'll make that one green. Of course, not got my entry yet, got another 30 minutes to wait. I do have to wait until that candle closes, so it does give me confirmation that we've not only held that structure level, but we've also seen a rejection. And we're back for an update. I was out, I was actually at an exercise class, so wasn't able to get the best entry. Nevertheless, here we are now. The reward on this trade is now 32. And we're back for the final update, and what a lovely low and tight flag. Just to run through this a little bit, we did have a second chance entry here, so we broke below our lowest structure point, giving us a confirmed break below, close below. We did not hit the projected targets. We saw a pullback into our structure level, and then we saw the market come down and hit for plus 32 pips. What a lovely low and tight flag.